Good morning, all. This is Raghu here. I'm sorry I was not able to bring a video much earlier. However, I just want to cover only the key levels of Nifty today. Next couple of days, today, tomorrow, I'll be occupied with some personal work, so I won't be able to bring any video. My apologies. So Friday or Saturday, definitely I'll bring one more educational video. Now, quickly, let's go ahead and see how Nifty performed yesterday. So Nifty gave a very solid green bar after yesterday's gap up, right? And currently it is at daily 20-day moving average. Several times I have told you, daily 20-day moving average has a very significance. It seems to be at 17,496, exactly a few points above the daily candle. So suppose if market gaps up today or sustains about daily 20-day moving average, you can anticipate market to go towards 17,600. 17,600 above, probably market can try to go towards R1 pivot, which is 17,860. This is for positional view. Now, how about intraday? So on this is very, very important, guys. Small things. I'm not asking you to follow moving average, but I'm just telling you to the way you need to understand the moving average. So here what happened is, after the sharp fall, prices were below hourly 20-day moving average and below 50-day moving average. Now here near the hourly central pivot, market try to take support. Now 50-day moving average is turning upside. The 20-day moving average, this is the mid-level of Bollinger Band, came up and trying to push upside. And when you see the candles, even the small candles going up towards the upside, Bollinger Band indicates a strong momentum, right? The strong momentum, yes, on hourly it's about 66. So if it sustains above high today, I said 17,600 is the target. It will go towards 17,600 because you see some resistance there. Above 17,600, definitely it can attempt 17,867. That is the view for positional. Now these are the Nifty levels I have for you. How did the Nifty levels work yesterday? Exactly, pretty accurate. Right, they work pretty accurate. It opened above this level and faced resistance for almost nearly half of the day, and then try to break out. This is the 5 EMA and try to attempt this one. Now slight alteration here because this is a pin bar. 1 2 1 2. I have shot a YouTube video on how to draw these levels. These are the price action levels and they work like a charm. You need to understand that they really work like a charm. And in between, this is also becomes a support. This is a pretty good buying pin bar, reversal pin bar. So this will act as a support. Yes, you have a lot of clutter, which means that I said yesterday market is moving into consolidation phase, and in consolidation phase, market will be very slow. And because of volatility, it may give 5-10 points move, and immediately in next 5 minutes, it might be 20 points down. So the way you need to trade this is these levels, very less quantity, near pivots. Patience is very key. Now yesterday I did a trade in the opening candle. Within 3 minutes I got 7.5k, and later on I entered the trade. This is here, okay, forget about all the email. Later on I entered a trade near R2, somewhere here, understand, here somewhere. I was busy. So from here, I think here, I believe. So here till 24 minutes, I was in 4K loss. So what was my stop loss? My stop loss was just to show you guys. It's somewhere here. Watch this 5 EMA. Right? I think somewhere here, here or here. I forgot where I took. I don't have the order number. I need to check. So somewhere here, okay, 20 minutes. There was no move. I think somewhere here, 11:50. 12:25, yeah, around 35 minutes. There was no move at all. I was in continuous loss of 34Ks, and my stop loss was below this blue line 5 EMA. If you see this 5 EMA candle never closed below this. I was just holding it, and probably in this candle I took around 4 points and exited. I just took 4 points. Someone who entered here near R2 pivot with an inside bar. So these are the key. This is an inside bar. This is an inside bar, and these inside bars are formed near R2 pivot. And how to use EMA, not when market is flat. So this is a range. Consider this as a double top. Now near this range is getting broken. Okay, range is getting broken here. Now here, when the range gets broken, this is where you need to consider 5 EMA. And please note, 5 EMA means you have to wait on 5 minutes closing basis and opening basis. Now several times you see here, if you see the wick, even this one, initially it was a red bar below 5 EMA. This was a red bar below 5 EMA. So this was also below 5 EMA. So you might think you are losing, but when you start practicing for 5 minutes closure basis, watch here, from here till here, this one also came down till here. Market was always on upside 5 EMA. So you will make more money the moment you start practicing. Just wanted to highlight that. But anyway, from pivot's point of view, if you see market is in some kind of channel, maybe this is a wedge or parallel, I don't know, it looks like a wedge because going here it is wide and is getting narrower and narrower. So any channel in a downtrend upside channel always supposed to be going down. I don't know whether it will go down or not, but that is the way all channels gets broken. This is the universal truth. Now for 2 consecutive days we have a ascending CPR indicating that market is in uptrend. But yesterday, was this a uptrend, clear uptrend? It was very choppy, isn't it? It was very choppy. If you see, I'm making it big for you. Too much of overlapping candles. So better to avoid these kind of trades, because if you don't know how to trade the small range bound, how to scalp points, you will enter into losses. A lot of folks went into loss because they were not able to identify the proper trend. So if it is in uptrend, you buy, you hold it for entire day for few 20 points or 15-20 points and just close it. Now an important thing I want to show is, see the peak, higher high, higher high, higher high. Watch RSI, lower peak, lower low, lower low. The peaks are going in opposite direction, isn't it? So to understand this, what I mean is market is going this way. Make this blue line here going down. So it is indicating flat momentum and a negative divergence. See the ADX? ADX is below 18. So this is 5 minutes time frame. So if you understand how to use these momentum indicators, the momentum is dying down. Yesterday there was not much conviction with the buyers for market to go up. So assuming that if there is a gap up, if it sustains above R1, you need to go for 15,600. I said, what will be a stop loss? 15,530 below. If it again break upside, go long. If it breaks down, exit. This should be the strategy for you. If market is going down, we have S1 at 17,356 and previous day low at 17,310. So below 17,310, watching the momentum indicators, if the momentum is above 65, 70, ADX is above 25, and the buying is above that ADX around 30, you can definitely go be short below 17,310, target the gap fill till 17,178. Hope this helped, guys. Thanks a lot. Have a good day and wish you good luck in today's trading.